Hi students, welcome. In this video we will be learning audit finalization, procedures and sufficiency of evidence. So what is audit finalization? Audit finalization is an analysis performed at the end of the audit based on the evidence given to the auditor against the financial statement. These analytical procedures are performed to come for the conclusion based on all the testings, procedures, internal control, vouching, verification, valuation and examination of the financial statements were performed at audit finalization, and which is also included that is risk assessment stage 2. How the financial statement closing process is going to be take place? The financial statement closing is often at a high risk area. The auditor and clients are under pressure to complete the audit and reporting process on time. So the auditors are required to perform these procedures on the closing process, which includes that is reconciliation of financial statement based on the records or evidence and adjustments made during the course of preparation of financial statements. For that, the audit review system is very much important. So they will be checking the procedure and the sufficiency of the evidence to finalize the audit procedures. So in simple, to finalize the audit, they will be reviewing whether the accumulated information or the books of accounts is correct and whether it is clearly given by the management or not, and what is the conceptual framework says. So these are the major things. So an understanding with the management and if applicable those charged with the governance regarding a review of financial statement should include the following matters. So they have to check with the audit review. The first point is the objective of a review is to obtain limited assurance that there are no material modification has been made to the financial statement in order to confirm the applicable financial reporting framework. In simple, reporting framework ಅಥವಾ ನಮ್ಮ conceptual framework ಅಂತ ಏನಿದೆ ಅದರಿಂದ ಯಾವುದೇ ರೀತಿ modification for that particular year ಏನು ಮಾಡಿಲ್ಲ ಅನ್ನೋದನ್ನು ಅವ್ರು ಚೆಕ್ ಮಾಡಬೇಕಾಗತ್ತೆ. And next, all the points are management is responsible. When management is responsible, ಈ ಪಾಯಿಂಟ್ಸ್ನೇ ನೀವು ಬರೀಬೇಕಾಗತ್ತೆ. ಮ್ಯಾನೇಜ್ಮೆಂಟ್ ಇಸ್ ರೆಸ್ಪಾನ್ಸಿಬಲ್ ಫಾರ್ ದಿ ಪ್ರಿಪರೇಷನ್ ಆ್ಯಂಡ್ ಫೇರ್ ಪ್ರೆಸೆಂಟೇಷನ್ ಆಫ್ ದಿ ಫಿನಾನ್ಷಿಯಲ್ ಸ್ಟೇಟ್ಮೆಂಟ್ ಇನ್ ಅಕಾರ್ಡೆನ್ಸ್ ವಿತ್ ದಿ ಅಪ್ಲಿಕೇಬಲ್ ಫಿನಾನ್ಷಿಯಲ್ ರಿಪೋರ್ಟಿಂಗ್ ಫ್ರೇಮ್ವರ್ಕ್. ಬೇಸ್ಡ್ ಆನ್ ದ ಫ್ರೇಮ್ವರ್ಕ್, ರೂಲ್ಸ್, ಪಾಲಿಸೀಸ್, ರೆಗ್ಯುಲೇಷನ್ಸ್, you have to construct your books of accounts. You have to prepare and present it to the auditor, and the auditor is going to give his audit report based on the financial statements which you have given as a information. And the management is responsible for designing, implementing and maintaining the internal control system of the company in preparation and fair presentation of the financial statement. The company's internal control system is an integral part of the audit procedure too. So if the internal control system is effective and efficient, then only the fair presentation or the accuracy and completeness of the books of accounts can be obtained. So for this particular audit review point also management is responsible. Then management is responsible to prevent and detect the fraud. This is one of the objectives, so we will not discuss more about it. Management is responsible for identification and ensuring the entity complies with the laws and regulations applicable to its activities. Whether the company's operations, activities, process are complied with the laws and regulations, rules and regulations of the boards which is given by various authorities. And the management is responsible for making all financial records and related information available to the accountant. So all the informations which is going to be given for the auditor, that has to be, or the right or the accessibility has to be given by the management to the accountant, because he is the one of the person who prepares the books of accounts. So the complete responsibility of the management has to be given to the accountant in making the financial records and related information, because some of the companies will not be given any such a type of responsibility, and also they have a limited access to the books of accounts. Then management is responsible, and management will provide the accountant at the conclusion of the engagement with a letter that confirms written representation made during the review. So here also a written representation of the books of account is very important, because the management has given the accountant the full accessibility in the complete engagement of the process. And finally, the accountant is responsible for conducting the engagement in accordance with the SSARSS issued by the AICPA. So, the accountant is a responsible person who prepares the books of accounts, and if the management have given the complete rights to do that, then the accountant is responsible for all the books of accounts and its treatments, which is given by SSARSS, that is Statements on Standards for Accounting and Review Services, and which is issued by the AICPA, American Institute of Certified Public Accountants. You know, now the accountant is responsible for conducting the engagement and audit review too. So, the designing and performing of review procedure is very simple. The accountant should design and perform all these analytical procedures and make inquiries and perform other procedures like review procedure, because the accountant's understandability with the industry is one of the utmost objective, because the combination of accountant with the management will give you a flexible as well as an effective and efficient books of accounts. Then his or her knowledge about the client or the company, and his or her awareness on the risk which is associated with the books of accounts, and whether he is failed to modify the accountant's review report on financial statement or not. These are the designing of the review procedures which is given by the accountant, and he is going to perform based on the procedures which is set by the various authorities like IAA, ICAI, and you know the remaining boards which we discussed in the last classes too. And what kind of inquiry and other review procedures which an accountant is performing within the audit review system to make that the audit finalization or the sufficiency in the evidence. Inquiry of members of management who have responsibility for financial and accounting matter concerns the following points: whether the financial statement have been prepared in conformity with the applicable financial reporting framework, whether the books of accounts have been prepared based on the financial reporting framework or not. If it is yes, then the sufficiency is obtained. Secondly, the entity's accounting principles and practices, methods which is followed in applying them, and the entity's procedures for recording, classifying and summarizing the transaction and accumulating the information for disclosure in the financial statement. So, the complete accounting practices has been given here. So, the accounting maintenance of accounting should be done through principles and practices of accounting, with the type of method you are following, how you are recording, classifying, summarizing the transaction, and also how you are disclosing the financial statements is very important to show how rich are you with the audit evidence. Then unusual or complex situation that may have an effect on the financial statements. So, the accountant is going to inquire whether is there any unusual or complex situation which affects on a financial statement. Significant transactions occurring or recognized near the end of the reporting period, just like subsequent event. Is there any subsequent event which is having its impact at the end of the or near to the end of the reporting period or not? The status of uncorrect misstatement identified during the previous engagement. What kind of treatment you have made for the uncorrected misstatements which are identified in the previous engagement, whether it is corrected or you are maintaining the same error in the books of accounts. So, that is also dealt through with accounting or an audit evidence. Then questions that have arisen in the course of applying the review procedures, questions which are raised by the auditor, questions which are raised by the accountant to the management, because the management or the audit committee must answer the questions which are raised due in the audit procedures, because it is one of the right of the auditor that he has the right to hear the explanation based on the suspects were made. Then subsequent events to the date of the financial statement that could have a material effect on the financial statement. If any subsequent events are happened in the due course of the business, the financial statement should recognize and disclose the subsequent event with the financial statement. So, that is also properly maintained or not, that has to be inquired by the accountant in the audit review system. Their knowledge of any fraud or suspected fraud affecting the entity involving management or others where the fraud could have a material effect of the management. If the company or the management is not given any accessibility, full accessibility to the accountant, if it is not given, then the management may have involved in the framing the conceptual framework for the accounting as well as auditing. So any kind of errors can be happened. So the knowledge of the accountant should be based on the frauds which may happen by the management, because that is also one of the disadvantage. So before finalizing the audit, the company's accountant should check whether management is involved in preparation of accounting. That is also one of the important inquiry. And finally, significant journal entries and other adjustments have to be checked. Then communications from the regulatory agencies, in addition to the members of the management who have responsibility for financial and accounting matters, the accountant may determine to direct inquiries to the others within the entity and those charged with the governance if appropriate. So the accountant will be having this particular right to communicate with anybody with the governance as well as those who are framing the law. The last topic is dealing with uncorrected statements. So if any error is found out but still it is not corrected, so that is uncorrected statements. The auditor's responsibility is to evaluate the effect of identified misstatement on the audit and of uncorrected misstatements, if any, on the financial statement. That has to be dealt with the uncorrected statements in the financial reporting. So this is the scope, and what is the objective of the auditor is to evaluate the following uncorrected statements are: he has to identify the effect of the identified misstatement on the audit and the effect of uncorrected misstatements in, if any, on the financial statements. So in simple, uncorrected statements anta andre ಏನು, which is identified and which is having error. So the objective says the effect of the identified misstatements on the audit. So audit ಮೇಲೆ ಆಗಬಹುದಾದಂತ identified misstatements ಏನೇನು, that is one of the objective when you are dealing with the uncorrected statements, and the effect of uncorrected misstatements on the financial statement. ನಿಮ್ಮ books of accounts ಮೇಲೆ ಆಗಬಹುದಾದಂತಹ ಒಂದು ಎಫೆಕ್ಟ್ಸ್ ಏನೇನಿರುತ್ತೆ ಅನ್ನೋದು ಮೇಜರ್ ಆಬ್ಜೆಕ್ಟಿವ್ಸ್ ಆಗಿರುತ್ತೆ. If uncorrected statements or the identified statements are error, then the auditor must communicate for the correction of those misstatements. So the auditor shall communicate on the timely basis of all the misstatements accumulated during the audit with the appropriate levels of the management, unless prohibited by law or regulations. The auditor must communicate these misstatements with the levels of the management, appropriate levels of management. If the misstatement is made by the top level, then that has to be communicated with them. If it is done by the subordinate level, then the communication has to be sent to them. The auditor shall request the management to correct those misstatements. If the management refuses to correct some or all of the misstatements communicated by the auditor, then the auditor shall obtain an understanding of the management's reasons for not making the corrections and shall take the understanding into account when evaluating whether the financial statement as a whole are free from the material statements. Based on these scenarios, evaluation of the effect of the uncorrected statements can be treated. Prior to the evaluating the effect of uncorrected misstatements, the auditor shall assess and reassess the materiality to confirm whether it remains appropriate in the context of the entity's actual financial results, because everything comes or everything will be decided based on the financial result of the company. So the auditor shall determine whether uncorrected misstatements are material, individual, and in aggregate. In making this determination, the auditor shall consider the following things: the size and the nature of the misstatement, whether both are in relation to particular classes of transaction, account balances, and also the disclosure of the financial statement as a whole and the particular circumstances of their occurrence. So based on the transaction, the complete size, nature, disclosure, everything will be assessed by the auditor while he is evaluating the effect of those unrecorded and uncorrected misstatements and the effect of the uncorrected misstatements related to prior periods on the relevant classes of transaction, account balances or disclosure and the financial statement as a whole. Based on the period, whether it is going to be affected on the financial statement or not. The time is also very important. Once it is evaluated, the communication with those charged with the governance or the management has to be done by the auditor. So the auditor is going to communicate to the governance or the management about the uncorrected misstatements and the effect that it is going to be happen on the audit report and what the auditor is going to written on the auditor's report unless the prohibited by law or regulations. So the auditor's communication shall identify the material misstatement or the uncorrected misstatement individually. So the auditor shall request the management to correct the uncorrected misstatements. Secondly, the auditor shall also communicate with those charged with the governance the effect of uncorrected misstatements related to prior periods on the relevant classes of the transaction, account balances or disclosure and all the financial statement as a whole. So the auditor is going to communicate and he will be requesting the management to correct those uncorrected misstatement, and he is also communicating with them about the period of the uncorrected statements, because the previous year's uncorrected misstatements will be having its effect on the assessment year's books of accounts. So the presentation and disclosure of the segmented information in accordance with the applicable financial reporting framework is a very important thing in communication, because whatever you do, it will be within the framework of the financial reporting, and if they are corrected or not corrected, that has to be disclosed in the financial report. So this is how the auditor is going to deal with the uncorrected statements with management. Thank you.